Bismillahirrahmanirrahim. Assalamu alaikum. I am Sayyid Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Intermediate Accounting, and the course code for this subject is BS 363. This is lecture number 23rd, and the topic for today's discussion is royalty accounts, under which we will discuss the lessee's accounts and how to record the accounting transaction and entries in the books of lessee account. The outline of this lecture consists of the discussion related with the royalty accounts and the accounting procedures in the books of account, under which specifically this lecture deals with the stage number 2 and 3. Since we have already covered stage number 1 in the previous lecture, so therefore the emphasis will be on the discussion pertaining to stage 2 and 3. Here is a short recap regarding what we have covered in the previous lecture, like entries in the books of account where the lessor is supposed to be paid out the royalty fees or the minimum rent, whichever is greater. In the books of lessee, we have to debit the royalty accounts. There was a short working account if we are going to pay in excess to the royalty fee in a particular year, and then we have to written off any short working which is irrecoverable or unrecoverable at the end of the year. We have 3 different stages under which we record the accounting transaction in the books of lessee. Stage number 1 has already been covered in the previous lecture with a thorough and detailed example when the royalties are less than the minimum rent, and then we have 2 conditions under stage number 1. So the emphasis of this lecture will be on stage number 2 when the royalties are more than the minimum rent or the short working are recoupable, and the short working are recoupable because we have to pay the royalty in excess to the minimum rent in the subsequent years of the mine usage. Therefore, the rules are the agreement between lessor and lessee allows us to recoup or recover our short working what was paid in the initial years of the business operations. And then finally, we'll conclude this accounting entries in stage number 3 when the short working account shows a debit balance until it is recoupable and recoverable, and then it will be shown on the balance sheet. Otherwise it will be written off against profit and loss account. So we will discuss accounting entry where we will write off the short working against profit and loss account. This was stage 1. What we have covered in the previous lecture. This example will continue on. This is the reason it has been mentioned in this lecture as well, that minimum rent was decided between lessor and lessee was 10,000, and in the first year the royalty fee was 8,000. However, we have paid the minimum rent which was 10,000, including this short working, which was the amount in excess to the royalty fee was paid to the landlord. However, this short working is recoupable or recoverable in the subsequent years if the company has utilized the mine in maximum capacity and its royalty fee become in excess to the minimum or dead rent. So we will see an example where the company's royalty fee will be greater than the minimum rent, and then the company will recoup this short working from the landlord. We have also discussed when minimum rent was not maintained, and then we got certain accounting changes, accounting entries changes over there. Here it is the emphasis or focus point of this lecture at stage number 2 when the royalties are more than the minimum rent and the short working are recouped. In the previous example and in the previous lecture, we have discussed that how the lessee has paid short working to the landlord, which will be recovered in this stage number 2, since in the subsequent year company has utilized the mines in its greater capacity and will have to pay out the royalty fee in excess to the minimum or dead rent. So we had taken an example of landlord as party A and a lessee as party B. And the lease agreement was minimum rent was decided to be paid out each year was 10,000. However, if the lessee has utilized the mine in its larger capacity and the royalty fee is greater than the minimum rent, then the royalty fee will be paid out to the landlord at the rate of rupees 2 per tonnage. Here in this example, that after a few years, initial years, the mine would begin to properly work and then the royalty will begin to exceed the minimum rent. Therefore, the short working of the previous years can be recouped out of the surpluses. So the example continued here as the company has produced 7,000 of minerals from the mines. So therefore, and per tonnage 7,000 tonnage, and the per tonnage royalty fee is rupees 2. So therefore we need to multiply both of them in order to calculate the total royalty, and total royalty needs to be paid to the landlord, come up with 14,000 in this case. So here it is the case that when royalty is greater than the minimum rent to be paid to the lessor or landlord party A, then what to do? So firstly, when the royalty fee is greater than the minimum or dead rent, then there is no need at all to record the minimum or to maintain the minimum or dead rent account. So we can directly look at this first entry for the amount becoming due to the landlord. Since the royalty fee is 14,000, so therefore royalty from the perspective of the lessee is an expense. Therefore, increase in expense account is recorded by debit. So we have debited royalties account by 14,000, and then this amount has to be paid to the landlord, and landlord account is our liability account. Therefore, an increase in liability is recorded by credit entry, and we have done the same, credited landlord accounts by 14,000 rupees. And then very important, we have to give a short narration at the end of each journal entry in order to depict or exhibit what has been happened in the above accounting entry. So being the royalty due, it is the recording of the liability as well as the royalty account which is due to the landlord. Now here comes the next entry, which is very important and pertinent to this question, which is the recoupment of short working. Let's go back. Here we can see that the company has paid in the previous example 2,000 of short working, which was in excess to the minimum or dead rent, which needs to be recouped at this stage number 2, because the royalty in this case is quite greater than the minimum rent. So therefore we have to recoup the previously paid short working to the landlord. So the landlord account, which is our liability account of 14,000, needs to be reduced by 2,000 because the company has to recoup the short working not in the cash, but the liability of the company, lessee's company, will be reduced. So debit the liability, and the company's total liability, which was previously 14,000, will be reduced to 12,000 since we have debited the liability account in the lessee's book of account. Then we have to credit the short working account, which was a temporary asset or an account receivable in the books of lessee. So this account receivable has to be written off. So when there is decrease in the asset account, it is recorded by credit entry. So therefore we have credited 2,000 rupees in the short working account. Since we have to recoup the short working, this is the reason we have not written account receivable, rather we have written off the short working what we have previously paid at the initial year of the usage or deal of this lease account. And then comes the shortest narration, being recoupment of short working with the amount recouped, and since we are in a position to recoup at least 4,000 of short working, but since we have only 2,000 paid in the first year to the landlord, therefore we cannot recoup full-fledged 4,000. Rather, we have to recoup what we had paid to the landlord in excess to the royalty fee in the first year, which was 2,000. So we have written the recoupment entry over here. After this recoupment, which was 2,000 in this case, we are at third entry, which is for the payment to the landlord. Now it's time to pay the royalty fee to the landlord. Although the royalty in this case was 14,000, but we have to pay in terms of cash only 12,000 of royalty fee, and the reason is we have recouped 2,000 of the short working what we have paid to the landlord in the first year. Here come the debit entry, which is landlord, and it is a liability account for the lessee. There is decrease in the landlord account, which is liability, therefore we have debited it with 12,000 rupees, and we have paid this 12,000 rupees in terms of cash to the landlord. Therefore cash is an asset account, so this is the reason we have credited the cash account in the books of lessee. And then we have given the narration, which is being payment to the landlord with the amount that is net out of the royalty after short working. So this is the way an entry how we can recoup the amount of short working what we had paid previously in the starting years to the landlord. Another way around, we can also merge the entry number second and entry third in the following fashion by simply writing down the total liability account, which is landlord account. There is decrease in the liability account of the lessee's book of account by 14,000. We had paid cash, and cash is an asset account. There is decrease in cash account by 12,000, and then there was a subsequent temporary asset which was mentioned on the balance sheet of the lessee's account. Short working account, which is a temporary asset, has been reduced by 2,000, so we can also merge the second and third entry. Here it is the two entries what has been merged in the next slide, where we have merged this landlord account only once by 14,000, and then to mention cash and the short working account one at a place like this fashion, as we have done over here with the amount due and then with the amount of short working recouped. And then we can give a short narration like being the payment of cash to the landlord after recoupment of the short working to the extent of 2,000 rupees. Now it's the stage to mention the final entry, and the final entry is to close the royalty account. Since this is a temporary expense account and we have to close all the expenses against profit and loss account. We know that profit and loss account has generally has a credit balance, and the credit balance shows that company is in the profit. This royalty accounts is an expense account with respect to or from the perspective of the lessee. When we are recording entry in the books of lessee, this royalty is an expense account. However, when we will be discussing the lesser book of account or landlord account, this royalty is an income for landlord. However, it is an expense for the lessee, since that business is going to pay out this amount to the landlord. So it is an expense for lessee. So it has to be set off against the profit and loss account, and it will definitely reduce the overall profit of the company. So what we have paid to the landlord, actually in terms of cash, we had paid 12,000 rupees to the landlord. So therefore our journally depicted profit and loss account, which shows a credit balance needs to be given a debit entry. So therefore, we have debited profit and loss account by 12,000 and credited royalty account, which is a reverse entry for an expense, in order to write off or transfer this royalty fee into the profit and loss account of the lessee. Let's discuss stage number 3. Sorry, here it is 2, but actually this is stage number 3 slide. Let's discuss stage number 3, the final entry. When in the narration states, so long as the short working account shows a debit balance on the books of the lessee, it is recoupable. Until and unless the short working is showed on the balance sheet having a debit balance, it will be shown on the balance sheet as a temporary asset until it is recouped fully, or another way around, when the time has been lapsed and time has expired to recoup. As mentioned, that subject to the time fixed for the recoupment, like normally the landlord or the lessor limit the time for recoupment of the short working amount or the excess amount what you have paid in the starting year of the business to the landlord. Normally the lessor restrict it for the 2, 3 or 4 years. The lessor may also restrict the short working recoupment in terms of a fixed tenure or restricted period, or another way around, it may have a floating perspective as well, where the lessor ask or allowed in the agreement of the lease that the lessee can recoup this amount with respect to the short working subsequent years. So if the time limit expires but the short working have not been fully recouped, like 3 years has been lapsed since the company has paid excess amount in royalty in order to meet the rule of minimum or dead rent, and if the time has expired, now what the lessee has to do is to write off this short working since the time has expired, and now you cannot claim this short working from the lessor or landlord. So the lessee is going to write off this amount against the profit and loss account. So this, once the time is expired, it is treated as a loss to the lessee, because now after 4 years lessee cannot claim that short working balance from the landlord. Therefore the lessee has to write off this amount from the profit and loss account. And how to do that? For writing irrecoverable short working, once again the entry is same. We have to debit the profit and loss account, and whenever we debit the profit and loss account, it usually reduces the overall profit of the company, since the profit and loss account generally shows in profit and the profit balance is in credit form. So when we give a debit entry to the profit and loss account, it will actually reduce the revenue or the profit of the company. And this short working account is credited because the short working was a temporary asset of the lessee, and this temporary asset, when there is a decrease in the asset, we usually know that when there is decrease in asset, it is recorded by credit. And since we are writing it off and there is decrease in this temporary asset, which could be recoupable if the lessee has utilized the mine in its good capacity so that the royalty may increase the minimum rent. That was the position when the lessee can claim or recoup the short working. However, it is now been written off, so therefore the short working account, which is a temporary account, needs to be written off. Therefore we have to give a credit entry for the remaining short working, and will charge the same amount to the profit and loss account, which will decrease our profit of the lessee. And then we have to give a short narration at the end, that being the transfer of irrecoverable short working to the profit and loss account. And this statement clearly states and explains that the lessee was unable to recoup its short working within due period of time. So this was all about the the royalty accounts when royalties are more than the minimum rent and the short workings are recouped. We have discussed the numerical example for recoupment of short working what we have previously paid, and then we have also finalized the stage number 3 where we have written off the short working if that remains irrecoverable for the given period. Thank you very much for listening to this lecture. If you have any confusion or question, you are free to ask on KCMS, or another way around, you can also email me on my official email address and I'll be happy to answer your question. Good luck for the day. Allah Hafiz.